Hey guys, so today I'm going to be talking about this SPDR Gold Trust, and what this actually is just a trust, an ETF that allows you to track the gold spot price. Now, essentially, you can kind of bet for or against gold. However, within the last few weeks to months, it's been proven that gold is not really one to be bet against here. They are absolutely rocketing off, especially in the last year period after the economic downturn. You can see that they had a large pullback on their price. However, immediately following, they've had one of the biggest bull runs in the history of the commodity here. So, one of the main things that you kind of have to worry about with a big run like this is that when gold does run, it kind of reflects that there's some kind of scary thing going on in the market, or there's some kind of factor that's making people want to take their money out from just regular cash, from regular assets, and put it into these gold assets or these assets that have already an intrinsic value and not just a paper value here. So one of the main things we have to watch out for is why this is happening here. And one of the main reasons why that I've heard that it's happening and that I myself have seen is with all these stimulus checks. And you can see that gold has ran a lot around the time when they do announce the stimulus checks. Here was the first one in April and July, in April and May. And then the second one now that they're announcing in June and July has made gold run even further up. Now, inflation hasn't really moved in a lot of years in the US, and we're one of the most stable countries when it comes to inflation and when it comes to how many bills we're printing every year. However, with these stimulus checks coming out and with all this extra government help being handed out to virtually anyone, now I personally have friends and I know of people who are abusing this stimulus system, and it's very unfortunate, but it's hurting the economy. And a lot of people are being able to see this and are investing into this SPR Gold Trust as they do think that it can continue rocketing up. Now, as with any other stock, any other ETF, futures, commodities, etc., you don't want to buy it when it is already up 100%. Now, you can see that they're up 40% within the last year, and this is almost a movement of around $50 to $60 here. So I would say if you're going to go in on this, be very careful. However, right now I'm just using it to kind of view whether or not the market will be up or down, whether or not people are very, very scared of what's happening, or whether or not they think that it will be good in the end here. Now, you can see every time that the stock market kind of pulls up, they have a small short pullback here on the SPDR Gold Trust, and the ticker symbol for this is GLD. Like I said, this literally tracks the price of gold and any other gold, so gold bars held in the London vault, so essentially the price of gold here. And what you kind of have to watch for is whether or not this can continue going up or if it could continue going down. If it does hit $200, this will be an incredible moment because of the fact that it hasn't hit $200 in years here, guys. I don't think it has ever hit $200. So what you kind of have to watch out for is whether or not this is signifying a kind of a momentum shift from the economy recovering to maybe us starting to see the bad side and the cracks starting to form within the economy as a result of all this bad economic policy that we've been seeing here in the last few weeks. Now, part of the stuff that we've been seeing here in the last few weeks is these lowered interest rates, a lot of lowered unemployment, or sorry, higher unemployment. Additionally, a lot of lower rental numbers on houses, which is one of the fastest growing markets in the US before the economic downturn. So all this actually signifies that maybe the economy won't be recovering as soon as we thought, and maybe we could even reach a period where we're going to see a lot more economic downturn than what we're seeing right now as a long-term effect. Now, if you guys were alive during the 2008 recession, which I assume 99% of you are since you are trading stocks, well, you know that during the recession here, it was a very, very slow decline. And one of the things that we've seen actually in the last week that also moved the SPDR Gold Trust was the fact that the unemployment numbers came out higher for the first time since the economic downturn. So what this kind of shows is that a lot of people may be even going back to unemployment and coming onto the unemployment benefits during this stimulus check period instead of trying to come back to work and kind of put themselves back into the economy and continue moving the US economy here. So that just be very careful with these kind of moves and with these kind of warnings coming through the SPDR Gold Trust because they can kind of reflect a lot of the stuff happening within the SPY. Now, a very, very good play is to simply just hold the SPDR Gold Trust because of the fact fact that they are rocketing up right now. However, be wary of the fact that they are at all-time highs and have never cost this much in the whole history of the trust or the ETF, whatever. So yeah, guys, just be very, very careful here. If you are going to invest in GLD, I've heard a lot of people talking about going in on this ETF, buying a lot of shares, and hoping that it will hit the $200 mark. Like Tesla, they think that any stock can run up. However, it's simply not true. If tomorrow we hear that the stimulus checks are canceled, I feel that the SPDR Gold Trust would pull back immediately. Or if we hear any sort of news kind of showing that the economy is coming back much stronger than what we've expected, then I think that this SPDR Gold Trust can actually pull back a lot because of the fact that they've run up so highly as a result of all the negative news and kind of scary news that we've seen here on the S&P and on the market as a whole within the last few weeks to months time. Additionally, it's kind of weird that only tech stocks have been running here within the last few weeks, and a lot of people have been talking about how if a lot of these other stocks, bank stocks, maybe restaurant stocks, etc., don't start to come up here, airline stocks as well, cruise stocks even had a very, very large pullback within the last few weeks. And a lot of people are saying that this reflects badly on the market, and as a result, this is why GLD is going up. I don't think it's why GLD, the main reason it's going up, but I do think that it can influence what GLD's price is and what the SPY's price is in general, and this is reflecting very badly on the market recovering and especially the market recovering quickly here. So like I said in my last video, guys, there are a lot of reasons for the market to be up and down. If you do think the market will be down, then maybe GLD is a good play for you to make as a hedge play or a counterbalance to your S&P plays. So just keep a close eye out on GLD. I think they can continue coming up maybe around $5 or $6 more. However, after this rip here at the open of around $4 of highs, and then they came up all the way to almost 183, which would be another historic high for them. I think you guys should just keep an eye out, wait for a small pullback, maybe around $1 or $2 if we do see any kind of good news with the economy recovering, and then buy into this stock as a good way to hedge your positions here. As always, guys, just make sure you're buying in at the right time. This stock is already up, or this ETF is already up around 20%, or sorry, 35% in the last year. So just keep a close eye out on whether or not they can continue running up, or if they're going to have some kind of a pullback here as a result of these stimulus checks, and if they get delayed, confirmed, whatever's going to happen with them. So yeah, guys, just keep a close eye out. As always, don't forget to like and subscribe the video, and watch out for those plays.